What's up, everybody? This is my Tesla Model X, and today I want to talk about Tesla stock and whether or not it's a bubble. Should you buy it? What are the risk factors? Do I own any of the shares? How many of the shares do I own, and what did I pay for them? I'm going to tell you all of that in this video, as well as my basis for, well, what I'm doing. But I thought the best way to film this video would be in the car on autopilot. So let's do that.
What's up, everybody? We are officially on the road to Santa Barbara while the car is driving on autopilot. Now, I am supposed to jiggle the wheel every so often, and you probably shouldn't do this, but they have these little sandbags that you could just put on the wheel so that you don't have to jiggle it every so often. It's always very important, though, not to rely on the car or make YouTube videos while it's driving. So kids, don't do this at home. Probably also not a good idea that I have a laptop stand with a charger built into my Tesla. All right, so here's the scoop. Last year, I made a video and posted it on YouTube called Tesla Stock Will Double by 2020. Well, folks, I was wrong. It doubled by 2020, but it's since essentially quadrupled from when I made the video. So I think I want to start by establishing a little bit of credibility that I actually own Tesla shares rather than just saying I do. So here's a snapshot of my TD Ameritrade. Oops, one of my sandbags fell down. Hold on. Let me just put my backup sandbag right there. There we go. Okay, good. So here's my TD Ameritrade. You'll see that I have 323 shares in this TD Ameritrade account, and my basis is $266 per share, which basically means every extra dollar that the stock is now worth is pure profit for me. It looks like on this TD Ameritrade, I bought in at a total cost of $86,000, and that's currently worth almost $300,000. I also own 43 shares in a retirement account, another 58 shares in a Chase U Invest account, which I've really started liking investing in, another 23 shares in a TD Ameritrade HSA, and I've got another 2 shares in a Fidelity account. So that's how I get to my total of 449 shares. Now, just a heads up, I filmed this entire part in the car as well, but it took way longer, and I respect your time, so I'm just gonna show it to you here by sharing my spreadsheet screen with you so we can walk through it together and you could see it happen. Watch this because it's mind-blowing, especially if you like money. You need to understand this. All right, so here we go. Tesla currently makes 400,000 cars per year approximately. That's about 100,000 cars per quarter. I made a projection in the summer of 2019 that what if they could make 1,000 cars per week? Well, that would be 520,000 cars. And I thought they could accomplish that with the Chinese Gigafactory and the factory in Berlin, Germany that's now in development by the end of 2020. Now, Tesla makes about $56,300 per car that they produce. That's the gross money that comes in, that's the revenue. But obviously expenses come with that. And the margin for those expenses used to be about 18.9%. That is 18.9% of $56,300 would come to the bottom line because they're expenses like materials, labor, the factory, all that good stuff. But that was quarter 2, 2019. In the last quarter of 2019, the margin's gone up to 22.5%, which, keep in mind, Elon thinks he can get that margin up to 30%. But always remember this, if a sentence starts with Elon thinks, you just wanna be a little bit careful, especially if you're gonna hang your money on it, all right? So for the sake of the rest of this math, we're gonna assume that 22.5% of every $56,300 goes to the bottom line, which, just for giggles, 56,300 times 22.5 is $12,667 of every car goes to the bottom line. Now, with this margin, we have a profit for Tesla of about $6.5 billion. But there are operating expenses like research and development, administration, making EDM tracks, and AI parties. Those expenses currently sit at about $4.4 billion, which leaves a profit after tax of roughly $1.8 billion, which if you divide $1.8 billion by 176 million shares of Tesla available, you get an earnings per share of about $10.52 if Tesla produces 520,000 cars.
Now, this is where the real fun part happens. With this number, we can now compare Tesla using the price to earnings ratio to other companies. Now, in case you don't understand price to earnings, don't worry, here's a quick primer for you. I even have a real estate analogy, which you all know I love investing in real estate, which if you're currently FOMOing because you didn't buy into Tesla stock like 500 points ago, don't worry, you could still get yourself some awesome below market value real estate. Check out those courses in the description below so you can not only learn how to invest in real estate below market value, but manage your own property to increase your cash flow and maximize your wealth as soon as possible. You could use the special Tesla coupon code down below.
Price to earnings is basically the multiple of the earnings that the actual company makes per shareholder that the company is selling for. This is kind of like in real estate. In real estate, we have something called a gross rent multiplier. That's like if a building makes $100,000 in rent and it sells for $1 million, it's selling for 10 times gross. It's kind of like a price to earnings ratio of 10. Well, stocks work very similarly.
So now we understand what a price to earnings ratio is. Well, let's use this spreadsheet that we just created, which is exactly what I did in the summer of 2019, show you the numbers I came up with approximately then, and then show you what I think could happen going forward. So what I did then is I took a price to earnings ratio of just 26, which at the time, Google or Alphabet had a price to earnings ratio of about 26 times earnings. Now that number has since changed. Some of these numbers are a little dated now. But anyway, if I put 26 in, I get my expectation of a Tesla share price, $273, and a buy under this price of $232. That was then though. What the heck is happening now that's different? Well, I think there are two main things that are different. Let's make the change right now. First, I think the market is pricing in that there's no way Tesla would not be able to produce 1 million cars by the end of 2022.
It's obvious that Musk could make 1 million cars this year, and he still wouldn't be anywhere close to meeting the demand for these things.
But you can sort of forward project your profits then, and the stock market tends to do that, and then the price goes up now. This is why you hear things like, oh, the stock dropped on missed expectations, is because people set expectations now. They price the stock based on that or start buying based on that. And if expectations get missed, then the stock loses value. Anyway, if we put 1 million cars into this production here, we're also gonna have to increase our operating costs. So let's go down here and add $1 billion to the operating costs. So now we have $1 billion more of operating costs, but we're making 1 million cars, which is good because now Tesla's really gonna see the benefit of scale. Now you have a profit of $12.6 billion. You're bringing $6.1 billion to the bottom line. Watch what happens to the share price. This is insane. And then stay tuned for the risk factors and what I'm doing in just a moment. With a price to earnings ratio of 26, and my belief for an uninflated Tesla value by the end of 2022, once they produce 1 million vehicles per year, their stock should be priced at $909, which is crazy. That's just at a $26 price to earnings ratio though, which that's the crazy part because Google right now is trading at about $29 as an earnings per share, which would put Tesla over $1,000 per share. Note this buy under this recession protection number here. This is just taking 15% off the value above. Now, I know in a recession stocks could fall more, but I'm just putting in a 15% protection level there. In other words, buying under the second number here is like the biggest no-brainer. For me at least, okay? This is just for entertainment purposes only. So don't sue me, bro, if I'm wrong. Okay, but this is where it gets ridiculous because remember, we're using a price to earnings ratio here of just 26 to 29. Well, what happens if we use a price to earnings ratio of a company like Visa at 38? If I just put in a price to earnings ratio of 38, look what happens to the stock. It goes to a value of $1,328 per share or $1,129 as sort of the bear case scenario. Okay, but wait a minute. What company is kind of like Tesla, where you have a really awesome leader like Elon Musk, you've got a really good product and service, it kind of mixes online and tech and innovation, Ah, Amazon. Well, what's the price to earnings ratio of Amazon, a company that also happens to prefer losing money for the sake of growth, which is kind of like what Tesla's been doing? Well, Amazon has a price to earnings ratio of, and this to me, this is bubble level, okay? So don't think I'm endorsing this, but Amazon has a price to earnings ratio of 88. Let's change this to a price to earnings ratio of 88 and look what happens to Tesla stock. That, folks, is crazy.
Like this crazy turn coming up. I used to be nervous going into this, and it's probably gonna throw my sandbag on the floor. But lately, I've been pretty chill about letting this car do its thing. Sometimes I feel like it's a better driver than I am. Well, if Tesla's not going to go bankrupt, there's no reason why Tesla would not be able to produce 1 million cars per year worldwide. Now, am I suggesting that the price is going to go that high? No. Am I saying that Tesla's definitely going to produce 1 million cars? No. I'm totally just saying, if Tesla produces 1 million cars with a gross profit of $56,300 per car and a margin of 22.5% and operating expenses around $5.4 billion, then Tesla is pretty reasonably valued between $900 to possibly as high as $1,300, $1,400. And if then additional speculation happens, kind of like what happens with Amazon, well, then you could see it kind of bubble up or froth up to all the way over $3,000. And folks, that a little bit gives away my opinion on the Tesla valuation now. There's a lot of belief that the Tesla valuation is so high that we're in a bubble, that this is bubbling up, it's another Bitconnect, that this is just going to come crashing down. And you know what? It might. I'm not a soothsayer, but I'm going to tell you in a moment the risk factors for Tesla and what I'm actually doing. But first, I'm going to finish this belief. And the belief is, right now, this is not Tesla bubbling up. This is the market realizing that a company that was losing money for a decade just became really profitable. And there's a path for a whole lot more profit. And what do investors want? A share of profit. So to me, the current Tesla price isn't a symbol of a bubble. A lot of people are texting me going, "Congratulations, Kevin, you're doing great on Tesla stock. Are you going to sell now? Are you going to sell?" And that's a very common reaction. In fact, a lot of other people, like people in my private Discord channel, which, by the way, you could join the public section of my private Discord group. The whole stock market chat section is public, so you could join that and chat with me in there. Links down below under the courses in that coupon, by the way. But some people in there are saying, hey, you know what? Like, why is this happening? This doesn't seem to make any sense. Why is Tesla's valuation going up all of a sudden so high? And make sure you stick around because I'm about to show you exactly what I did this morning. It's a little bit of a shocker. And I think what's happening is we had this initial run-up of the Tesla shares doubling to about $400, like I predicted they would. And that brought a lot more attention to Tesla, to where more people are sitting down doing projections on Tesla, kind of like this math that I'm sharing with you here. And they're realizing, oh crap, this is a good deal. And to me, looking at something going, oh crap, this is a good deal, is not the sign of a bubble. It's the sign of people taking advantage of what I call in real estate a wedge deal. Like when I buy a house for $400,000 and it's worth $600,000 after I put 40 grand of lipstick onto it and I pocket the 160 grand of profit. That, folks, is being an investor. That is not me speculating in the sake of real estate. That's me taking profits and making money, folks. All right, so what now are the risk factors for Tesla stock? Well, my very wise brother-in-law, love my brother-in-law, he came up with the biggest risk factor that I agree with. What's going to happen if there are potential warranty claims on things like the self-driving chip, the computer software here, which we all know, I mean, you get a new iPhone every single year, the stuff gets dated fast. And this is self-driving technology. What's to make this exempt from that kind of same shelf life? So if Tesla has to start honoring a lot of warranties on computer chips and, worst case scenario, batteries, that could really hurt Tesla's margin a lot. And a lot of the math we were just working out was based on a margin of 22.5%. Last summer, we did see a margin as low as 18.9%, but my brother-in-law believes that margin could go as low as 15%. So you've got my brother-in-law being conservative at 15%, you've got Elon Musk being super excited at 30%, and you've got kind of what's happening now and me at about 22.5%. So you have to decide where you are in terms of that margin. What is it going to end up being? Now, the good news is we haven't even considered things like Tesla Solar or Tesla Energy or Tesla Roof, which I know some of those things are more speculative, and that's why they're not even a part of this discussion, really. But I just thought they'd deserve an honorable mention because, look, Tesla settled their lawsuit with Walmart. They're actively working with Walmart to solve the issues that were happening. I read every word of that lawsuit. I made a video about that lawsuit. And Tesla also came in and took the whole solar industry by surprise with their no hassle, we'll move your Tesla solar lease when you move program. But anyway, topics for a different video. Now, there are also other risk factors, like what if electric cars aren't desirable anymore as time continues? What if another company comes out with some kind of AI technology that can self-drive these cars better than this? Or maybe a company comes out with a self-flying car, which would be kind of cool. Like, I would totally sign up for that. And, you know, gas prices are going down as well as the cost of oil keeps going down. So this is getting a little bit tricky. You know, there are a lot of factors to consider here. But all of that said, I'm going to reveal right now what I just did. I don't even think I'm ready for this because I don't want somebody to make a Meet Kevin Exposed video in 3 months going, rah, rah, look what that idiot did. Oh well. I'd rather be transparent with y'all and show you exactly what I'm doing than only show you the things that are rosy. So this morning, and by the way, this is one of the reasons I really like Chase's YouInvest platform, I transferred $60,000 from my personal checking account with Chase into my YouInvest account at Chase, which this isn't sponsored by them. It's just really, I like it. The money was available like right away, and then I bought 66 shares of Tesla at $905.49. Now, we'll see if that was a big mistake, but given that my cost basis is around $266 before this trade, and even with this trade, my cost basis is still pretty low, I'm not super worried about it. Now, there are two more things that I owe you an explanation on. First, expect volatility. In fact, the shares that I executed at $905 went up from $905 to $962. And then 10 minutes prior to the close of business for the stock market, the stock pulled back to $860 and currently trades at about $898, bouncing right around between $898 and $905, which is what I paid. Now, if you're thinking about getting into Tesla stock, realize there is going to be a lot more volatility. And personally, I kind of want the stock to fall. If the stock falls to 800, 700, 600, 500, I'm sure there are going to be people going, haha, Kevin bought some of those shares, like 11% of the Tesla shares that he bought at 905, haha, what a loser. But know that if you see that stock go red, I'm going to be shopping again, just like I did when the shares were under $200. And that's because I so strongly believe in what I'm sharing with you in this video. Now, last thing, market cap. There is a lot of conversation on the internet right now about market cap, that because Tesla's market cap is so much larger than any other company in the world, that Tesla must be in a bubble or it must be overvalued. But to me, market cap has nothing to do with a company's profitability. All I care about when it comes to a property is how profitable is it. All I care about when it comes to a stock is how profitable is it. That's exactly what I do in my real estate investments. That's what I teach in my real estate courses, is it doesn't matter what the purchase price is, whether the purchase price is $50,000, $500,000, or $5 million, or $100 million. You gotta figure out how to buy something below the value that you think it's worth. I personally think doing that in real estate is a lot easier, but I like dabbling in stocks as well. So thanks so much for watching. If you like this kind of content, make sure to subscribe for more of my perspective. Thanks again, follow me on Instagram, and we'll see you next time.